Hi guys, it's Any, aka the Knock Trader, your friendly neighborhood swing trader, back again with another video. In this video, I explain how short selling works. A deep dive into how investors make money when share prices are falling. Let's get straight into it. You know what I'm going to ask you to do next. Hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at the Knock Trader on all social media platforms. And if you check in the description section below, there's a link to my mailing list. If you join my mailing list, you get priority access to my free training course on for beginner traders on how to trade. And you also get weekly emails of my latest videos and a spreadsheet that explains my entries and exits and stop losses for all my latest trades. Let's get straight into the video. So what is short selling? Well, it's when an investor or speculator borrows shares of a company from an existing owner through a brokerage and sells those borrowed shares at the current market price and pockets the cash. So the best way to explain it is through the image on the right hand side. So just to encapsulate what we mean by that is that if the short seller is the investor or speculator, so for example that would be me or you, retail or institutional trader or investor. Now if you want to profit off the share price of a stock going down, the first step they do is that they borrow, for example in this situation they would borrow 100 shares from a brokerage firm. So in my case I would borrow 100 shares of a stock from IG because that's the trading platform I use, that's the brokerage I use. Now once I borrow those 100 shares, I will now sell it back onto the market for $10 a share, for example. In this example, it's $10 a share. So I'll sell it onto the market for $10 a share. Now, if the value of the stock goes down, I could then buy back the shares that I sold for $8 a share. Now, when I buy back those $8, those 100 shares for $8 a share, I will then sell it back to the broker for the current price, which is $8 a share, and sell all the 100 shares. Now, because I've sold the 100 shares for $8 a share and I bought it from $10 a share from the same broker, I will have pocketed $2 a share, which is £200 profit, and that's how I make my profit. So this situation, this example is how people profit off stocks falling in price. Most people always talk about investments because the mass majority of the market invest for the value of stocks to go up, but there's also ways of making money with stocks going down. But there's also an ugly side to short selling. There's a thing called a bear raid. A bear raid is the illegal practice of ganging up to push a stock price lower through concerted short selling and spreading adverse rumors about the targeted company. A bear raid target is generally a company that is going through a challenging period, since his vulnerable position makes it easier for short sellers to take advantage of this. While short selling is perfectly legal, coordinated short selling is viewed as market manipulation by the SEC. So there's a bit of a grey area when it comes to short selling sometimes, with the way short sellers can collaborate to manipulate a stock. And but if you spread in false rumors, that is equated to fraud, and that is illegal. So there's a bit of a grey area when it comes to bear raids, and the reason why I'm speaking about this is because I'm currently making this video in Q. I won't date it, but it's around June 2019. And if you know about Tesla, there's been a lot of accusations of big institutional short sellers really piling in on Tesla to manipulate it so that the share price of Tesla tanks. As we all know, over the last few months, over the last Q1 and Q2 of 2019, Tesla's share prices have been tanking, and it looks like, from what it seems, a lot of people are attributing it to a concerted effort by mainstream media and powerful institutional investors to change the perception of Tesla through bad articles being written about it. Which brings me to the case study, which is Tesla, as I've been explaining. This is quite interesting statistics that I found about Tesla. So I don't want to just give speculation on these things. I've found some data on it. The top 11 authors who published about Tesla in 2018, a high percentage of the articles are negative. As you can see in the graph on the left hand side, these are the top 11 authors that wrote about Tesla, and mass majority of them, the negative index, most of them were over 50-60%. And if you look on the right hand side, Tesla in the news, they had 120 bad articles written about them in 2018 in comparison to 28 positive and 31 neutral. This may be just because they've had a lot of bad situations happen to them, but some people may attribute it to the fact that there's been a bear raid where institutional investors and maybe even people within the media have once again made a concerted effort to bring some bad press to light about Tesla so that the share price can tank. This has happened before with other companies, so it's something to be wary of when you're maybe entering a stock or even investing in a stock for the long term hold. You also have to, even if you believe in the fundamentals of that stock, if there are people in the market that have a lot of power and they have a vested interest in the demise of a company, maybe not demise, but like it's the selling off of a company, then they will make, some of them will go to extreme lengths to make sure that their predictions are right because they've got a lot of financial stake in the company tanking. So this was just a short video I made about short selling, and I gave a little example about Tesla just to give a little anecdotal evidence as to how bear raids work. I hope you enjoyed it. Any, aka the Knock Trader, signing out.